you're not going to see a move from 33 to 34. When silver moves, it really, truly moves. But normally that move takes a while to establish itself. And normally what establishes it is momentum in gold. We delivered quasi-religious experiences to the short community. And I suspect that if people end up being too short PSLV, that they could experience just exactly that kind of religious experience. There's nothing in the world worse than being caught on the wrong side of a short trap.
In today's news recap, silver price remains below $34 after Fed rate decision. Silver price holds on to gains after a previous session of losses, trading around $33.80 per troy ounce during Asian hours on Thursday. However, the non-interest-bearing metal faces pressure following the Federal Reserve's interest rate decision. As widely expected, the Fed maintained the federal funds rate at 4.25% to 4.5% during its March meeting, but reaffirmed its outlook for 2 rate cuts later this year. This stance aligns with forecasts of slower GDP growth and higher unemployment, counterbalancing concerns over rising inflation in the United States, potentially driven by aggressive tariffs imposed by President Donald Trump. Silver, a non-yielding asset, may have found support as U.S. Treasury yields declined, with the 2-year yield at 3.97% and the 10-year yield at 4.24%. Meanwhile, bonds gained traction following the Fed's decision to slow the pace of quantitative tightening, citing concerns over reduced liquidity and potential risks tied to government debt limits. Silver lease rates have surged due to shrinking stockpiles, particularly in London, as silver flows toward the U.S. to capitalize on higher prices. Banks and traders lease silver to ensure short-term liquidity for trading or operational needs. This shift has widened price gaps between major markets, with spot silver up 17% this year, outperforming other commodities. Additionally, physical silver transfers from Canada and Mexico are strained by tariffs, further tightening supply. Growing fears of a silver squeeze could disrupt trade for months. Now we'll show you the best clips of the latest interview, but first hit the like button, smash the subscribe button, and check the pinned comment because we're offering an exclusive discount on NordVPN, an essential tool for gold and silver stackers who value privacy and security. Make sure you safeguard your online activity and protect yourself from prying eyes.
Primarily affected private sector banks. It being gold was made a tier 1 asset for banks like Barclays, Bank of America, Citicorp, Daiichi Kangyo, those types of global banks. The buyers have been foreign central banks. I do believe that the Basel III Accords will be important to the gold price going forward when the private sector steps up to the extent that the public sector has in the gold trade. Other aspects of the Basel III banking accord probably indirectly will benefit gold too, in the sense that although the rules around gold were made less restrictive, there were other rules around the characterization of bank reserves. And in particular, the differentiation in reserves against debt instruments that were held for sale versus held to maturity. Accords that allow banks to extend and pretend around time losses in their portfolios that I think will destabilize the economy a bit, particularly in crisis, and as a consequence, likely, unfortunately, in this case, help gold. I hope that wasn't too wordy an answer. Silver, in my experience, has been more of a speculative instrument than gold. And silver tends to outperform gold towards the middle or the end of a precious metals bull market. In my experience, precious metals bull markets are led by gold because the first buyer is the fear buyer. Precious metals oscillates between greed and fear, with the fear buyer kicking off the move, and then the momentum established by the fear buyer bringing the greed buyer in. Silver, because I suspect of its lower unit cost, when the generalist money comes down into the precious metals space, that money eventually causes silver to outperform gold. And by the way, when the silver bull market starts, You're not going to need Rick Rule to tell you it's here. You're not going to see a move from 33 to 34. When silver moves, it really, truly moves. But normally that move takes a while to establish itself. And normally what establishes it is momentum in gold. People, I mean largely institutional investors, are expressing skepticism around the precious metals bull market. And the easiest way for them to express that dissatisfaction is on the New York Stock Exchange. The best vehicle for expressing either your support or your lack of support for silver on a leverage basis in equities markets is the New York Stock Exchange, and hence PSLV. PSLV is experiencing a war between those who buy the precious metals narrative and those who don't, much to my amusement. You know, there's a lot of people who are against shorts, primarily long. I love a big short position against something I'm in favor of. That's a position that has to be bought. And it's up to reality whether that position needs to be bought higher or lower. Earlier in my career, when I was more overtly a stock promoter, there was nothing in the world I liked more than a good short position. In some investments, by the way, silver related, often Pan American Silver and the Silver Standard in particular, we delivered quasi-religious experiences to the short community. And I suspect that if people end up being too short PSLV, that they could experience just exactly that kind of religious experience. There's nothing in the world worse than being caught on the wrong side of a short trap.
In today's news recap, gold slightly up after hitting record high overnight. Gold prices are up a bit in midday U.S. trading Thursday after overnight hitting another record high. Silver futures are modestly down. The precious metals bulls got through some central bank decisions this week, relatively unscathed, which gives them fresh confidence. April gold was last up $5 at $3,466. May silver prices were last down 21 cents at $33.99. The marketplace has digested the FOMC meeting that ended Wednesday afternoon with no change in U.S. interest rates. However, the Fed did slow down its runoff of its securities holdings, which is a slightly dovish lean. Barron's reported Fed Chair Jay Powell did a superb job of threading the needle. He said the U.S. economy is still solid, but added inflation is creeping up a bit, and there are heightened economic uncertainties. At present, the U.S. stock indexes saw their biggest FOMC day gains since the middle of last year. And Powell also managed to not draw the ire of President Trump, at least not yet. Also, the Bank of England and Sweden's Riksbank left their monetary policies unchanged today as expected. The key outside markets today see the U.S. dollar index higher. NYMEX crude oil futures prices are higher and trading around $68.25 a barrel. The yield on the benchmark 10-year U.S. Treasury note is presently around 4.2%. Technically, April gold futures bulls have the strong overall near-term technical advantage. Bulls' next upside price objective is to produce a close above solid resistance at $3,100. Bears' next near-term downside price objective is pushing futures prices below solid technical support at $2,900. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
I don't believe that gold will never be sold again. I believe that gold will be a form of liquidity for central banks. And if gold does extremely well relative to fiat currencies, I suspect that many of the banks will need to access the liquidity of gold to fund politically expedient domestic spending programs. I understand the idea that as a position becomes more concentrated, that the price volatility among the remaining inventory on the market becomes more volatile. I would suggest that volatility will come into the gold space when you see the retail investor return to gold. What you've seen really for 3 or 4 years has been a predominance of central bank buying. Most months in the last 5 years, the flow of funds in terms of precious metals-oriented ETFs has been negative, which is to say retail investors have been dishoarding gold at the same time that institutional investors, at least foreign central banks, have been hoarding gold. The exception to that, of course, would be the Chinese retail market, which has been consistent buyers of precious metals. If you own an asset class that goes up in price faster than the deterioration of the purchasing power of your currency, you, in fact, benefit. If you look back at the gold price in the period 2000 until today, over 25 years, the gold price has escalated, at least in nominal terms, in U.S. dollar terms, between 8.5% and 9% per annum. While I believe that the deterioration of the purchasing power of the U.S. dollar is substantially higher than the rate ascribed to it by the CPI, I would still suggest to you that in the year 2000 to the year 2025, that holders of physical precious metals experienced real gains in purchasing power in excess of inflation. I suspect that that trend continues. If one looks at history as a guide, in the period 1970 to 1980, according to the according to the Office of Management and Budget, the U.S. dollar lost 75% of its purchasing power. During that same period, the gold price rose 30-fold. Obviously, gold holders in the period 1970 to 1980 increased their purchasing power during a time of real economic turmoil, where most of their neighbors experienced a deteriorating material standard of living.
Do you agree with Rick Rule's outlook on silver? Is this just the beginning of a major breakout or a short-lived squeeze? Drop your thoughts in the comments below and let us know your silver price prediction for the weeks ahead. Now watch this video right here because it's a perfect fit for you, and I'll see you on the other side.